there is a thought, Rajiv, that infrastructure assets per se don't make money, if not the assets themselves, then when they are listed. In India, well, history is replete with examples of these companies not having made money. I would love to understand from you, when you think of infrastructure assets and your large investments into the Adani Group, and you have investments elsewhere too. There is ITC, HDFC, there are other names that have come about, and I'll talk about that. But just one question on the infrastructure assets valuing. How do you think about infrastructure in India or general infrastructure asset investing? Because the street seems to have a completely different view, so to say.
Yeah, so the infrastructure investing tends to be a little bit different than your consumer staples, IT service, so on and so forth. The way you get paid is if you're getting, let's say, mid-teen return IRRs, once you've invested in those, over time, the earnings certainty is very, very high, and hence they can sustain high leverage. Now, Adani is kind of unique because they are in a very strong investment phase even now. And what we've seen, for example, in ports, and ports is a very good case study, that after certain years, you will see a hockey stick of earnings come through. India has ridiculous TAM, if I'm going to call that, because you're basically competing with state-owned companies. I mean, look at the state electricity boards. I mean, who wouldn't want to compete against them, right? I would love to compete against them if I could. I've been talking about the most inefficient players you get in India. But it ain't easy. I mean, we saw the Reliance infrastructure in Mumbai. They couldn't cut it. So these infrastructure assets have a very long tail. The returns are regulated by the government most of the time. After the initial setup, you get very steady return. So to grow, you have to keep investing more capital. So they're always free cash flow negative. But you get very high returns, right? On a long-term basis. So you get 20, 25-year visibility, which is why we feel that most of the Adani infrastructure companies that invested, we're actually not betting on, we're not taking any economic cyclicality risk also in these cases, which you are in other cases because, they will earn almost irrespective of what happens to the economy in a certain way.
In which case, Rajiv, you would be happy if a large portion of the street is valuing infrastructure in the way that it does and talks about the high debt levels, which in some cases is justified as well. But in the ones that you made an investment, you would be happy that the street thinks of them that way because you can get them at a good clip, at a price that you want, because you are really investing into them or thinking about them from that long-term mindset, which the street might not be thinking about them.
If you look at the laundry list of failures infrastructure side, because you have to make sure you have access to capital, long-term stable capital, right? I mean, in India it's hard to get long-term sort of stable access to stable capital. I mean, that's an issue. But the thrust of the government has made a big difference in making this possible.